Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, talking to you from the borough of Queens in New York City. And this is the 25th of January, 2022. I'd like to remind you I'm the author of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that by going to miningstocks.com. We'd like to encourage you to consider signing up for Chen Lin's letter, What is Chen Buying, What is Chen Selling? And Chen will be with me momentarily to give you some of his ideas. You can sign up for Chen's letter by going to chenpicks.com, chenpicks.com. I want to thank all of you for listening to this show, making it one of the more popular shows in the Voice America Business Channel. Also like to encourage you to send along whatever comments you might have about this show. We'd like to hear from you, either pro or con. It's always good to hear from our listeners. And we do want to thank our sponsors for making this show economically viable. Today's sponsors: Novo Resources, El Oro Resources, Hannon Metals, Irving Resources, Lion One Metals, SK Mining Corp., Firefox Gold, and Timberline Resources. Titled today's show, Note to the Fed, The Laws of Mathematics Still Apply. John Rubino, Patrick Highsmith, and Chen Lin are my guests today. The big Keynesian fantasy that a country can forever become wealthy by consuming more than it produces has seemed believable to Americans because we have owned the world's reserve currency. That meant for the past number of decades, the Federal Reserve could create money out of nothing, out of thin air, so to speak, to enable Americans to buy foreign goods rather than Americans earning income through export sales to pay for those imported goods. But alas, the Federal Reserve and America cannot defy the laws of mathematics because money isn't exactly created out of thin air. Fiat money is manufactured with debt. So, decade after decade, America continued to consume more than it produced. Its debt relative to income has risen to the point where the United States is now, you could argue, technically insolvent. Because of excessive unearned money creation by the Fed, America is now approaching double-digit levels of inflation akin to the late 1970s. But unlike 1980, when a 20% Fed funds interest rate was required to break the back of double-digit inflation, America's debt load is so large now that not even a 1/4% Fed funds rate, or even a 2% rate on the 10-year Treasury, can occur without triggering the next stock market crash. In fact, the equity markets are having difficulty now at about 1.7 on the 1.75 or so on the 10-year Treasury. With the entire American economy now dependent on rising stock prices rather than rising GDP, the only likely option for the Fed, in my view, is to continue with the money-creating Keynesian fantasy that the U.S. towards driving the U.S. towards hyperinflation and very possibly a global currency reset. John Rubino will opine on America's precarious economic state and how we should prepare ourselves for what is to come when he's with me in the second half of today's show. Patrick Highsmith will be with me momentarily after a first commercial break to give us an update on Firefox Gold's exploration project. In Finland, they had some exciting news that was put out this morning. He'll be here to talk about that right after our first commercial break. But right now, I'm happy to tell you that Chen Lin is with me to share his thoughts as we start this new year, 2022. Thanks for joining me, Chen.
Thank you, Jay. Glad to be here.
It's really good to have you. Well, let's start out with gold and silver. What are your outlook for those precious metals as we heading into this year? I know you always have some unique views on those metals, given your connections with China and all. But what are your thoughts?
Right. This is a very interesting year. You know, China cutting interest rate. China already cut 3 times. The Fed going to raise interest rate. Fed supposedly raise 3 to 4 times. All right, this year. Historically, when that happened, usually it's a big turnaround of gold. It happened 2014 to 16 and 2018. Every time gold turnaround, scream higher. The reason is the world economy is quite connected, right? China, the weakened economy, right? And the United States and trying to raise interest rate, and they usually meet somewhere in the middle. That means the Fed cannot fulfill what they plan. Okay, they just said exactly as you said. It's just when the Fed raising interest rate, there's look at the stock market, look at all the other. Soon will be housing market, when the other bubble will crash down to the earth. So that its pain is unbearable. So every time, okay, this happens, gold turn around. Initially weaken a little bit and then just turn around. But this year, so far, gold has been very, very strong. And we are at 1850 now. It's amazing, ahead of Chinese New Year next week. So very, very interesting setup.
So, Chen, do you believe the Chinese New Year is key? Is there a lot of buying the Chinese New Year as the New Year approaches?
Right, Chinese currency has been appreciating in the past few months. Okay, which means gold, even U.S. dollar index going higher. But in Chinese consumer, which is the biggest gold consumer in the world, gold is actually getting cheaper in the past few months. So Chinese New Year usually the peak of the gold physical consuming period. And so there could be a little bit of weakness right after Chinese New Year. But it will be interesting. If any weakness, will be buying opportunity.
Mm-hmm. And what about silver?
Oh, I'm very bullish on silver because last year has a huge disappointment because solar panel couldn't, they couldn't pick up the production because of the supply chain shortage, component shortage. It seems to have been resolved. Solar panel set to have an explosive growth this year. And then China, if you saw my newsletter, they just announced they're going to build 13 high voltage transmission line. So that's to support part of the solar industry, right? Because solar is more to the west, Xinjiang area, like desert area, perfect for solar, but Beijing is on the other east side. So they need those high voltage transmission lines. So we should see a rapid expansion of solar panel. Again, China is about 90% solar panel production in the world, right? So that's very, very important. And then silver is for silver, solar panel is the largest industrial, demand. It's about 10%. So that set up very well for silver.
Physical demand for silver, and of course, there's people that still buy it as an investment or as a monetary metal. Chen, just real quickly, what about if you have an inflationary view this year, and I think you probably do, what about commodities in general? Let's say, what about oil, for example, or some of the base metals? Any quick thoughts on that?
Okay, well, the oil and base metal kind of depends on the Fed. I don't think Fed can raise interest rates much. They may do a few wrong. I mean, 1 or 2, 25 basis points, and then they will have to wait and see, right? The economy weaken, and they will stop raising rates. So I think all the other commodities may have extended run. Unless Fed just keep on raising interest rates, that will drive us into next recession. That's a different story.
And then base metals, look out, probably won't do
similar,
so.
Similar base metal, and also base metal benefit like copper, cobalt, nickel benefit about electrification, right? That's green metal, so that's also benefit for that.
Right, demand from China and elsewhere. All right, well, let's get into the biotechs just briefly with another about 4 minutes left here yet. Amyris and Synaptogenics are a couple of your favorites, I think. You want to talk about those real quickly?
Yeah, real quickly. I've been picking up more. Amyris, it dropped below $4, which is technically, this is a good place to buy. I mean, they raised money when they were $8 and $9 a few months ago. And convertible conversion price almost 11, so $650 million. Right, $650 million. That's a huge raise. So it's a stock cut in half, but you have to look forward, right? I mean, if you look at it into 2025, and the company guiding at least $2 billion in revenue, $2 billion is a B, and then over $1.5 billion is accounted for. They can see the growth. They hope they will exceed that, but if you just look at $2 billion, their margins about 60-70%, and as they building their own plant, their margin should increase by 10%. Well, you just say maybe not 10%, how about 5%? So instead of 66 and 65, you go to 70%. If the 70% margin, $2 billion, they will generate $1 billion of free cash flow. Okay, that's more than Netflix. So you think about that, that's the future, and then they can come into any industry, and then they can make the material, right? They already come into the cannabis market with CBG, with George. CBG, why they create CBG, not CBD? Because CBG is the most expensive one. So they can produce CBD, they can produce TCHC if they want to. I mean, once they get more plants running. So they can basically kill all these other, cannabis growing industry because their method is so much more efficient. Right? They cost about $500 per ton. So it's very, very hard to compete with them. And so anyway, it's a disruptive industry. And then if they generate $1 billion and more than Netflix, what if they have Netflix type of, I'm not saying they would, market cap, you're looking at triple digits, right? So that's where the upside is. I mean, but for investor, we talked about before, the market is so bad. What makes I stick my head in and buy here? Because of the future. That's the reason.
Yeah, longer term. Next year or two.
And you have to look at the long term. They're fully funded. They don't need to raise money. So they just execution, right? So you think if they have a hiccup, they have delay of the plan, those are things I worry more than just the stock price. If they can execute, the stock will go much, much higher from here.
Yeah, a disruptive story, as you say, synthetic biotechnology company and really doing things that no one else is doing, or at least not doing as efficiently as they are. All right, with just another minute or so left here, what about Synaptogenics? And this is a long shot, I think, but it could be really big if they're successful, and they're dealing with neurodegenerative diseases.
Right. It's out for Alzheimer's, and then they can reverse Alzheimer's. That's and then their trial is funded by NIH, which most biotech wouldn't get NIH funding. And then their result will come out at the end of this year. So that's a thesis. Very simple. The market is very, very tiny. It's one of 100 of their competitors.
Yeah, I mean, I'm seeing 6.7 million shares, Chen, if that's all there is, at $7.50 earlier today, something like a $50 million market cap or something like that. Does that sound right?
The competitor easily $1 billion, yes.
Yeah.
If they're successful, the upside is enormous, right? So it's a long shot, but reward is huge, right? So that's why you invest in those companies. So.
Lower risk, but potentially a very, very high return. And then I know that Tracida is one that's doing extremely well. They're really slowing down the kidney disease, degenerative kidney problems, right? So they can keep people off of the
right.
And so that is one that's really doing well, and you have high hopes for them as well, I think.
Yeah, very high hope. This is exactly what we bought last year. I mean, the stock almost tripled, but it's still the same. It probably will triple again and again, because they already have phase 3, right? They already have successful phase 3. FDA wouldn't accept their accelerated approval because FDA want them to do an outcome study. So the outcome study is going to stop in Q2 and result into Q3 from all the indicators. Pointing, if you go to the later presentation, it's probably 99% chance of successful. Right? Wow. So, and then you put those in, and then put the CKD market is $60 billion, and then growing rapidly, probably to $100 billion because of people have dialysis, all these kidney transplant. So that it's very, very severe disease, and this could be the best-selling drug in the world if they are successful. And then look at their market cap, so tiny. So there's a lot of upside from here. And, of course, it's very long-term. The approval will be next year at the end of 2023. But I think the stock can appreciate a lot as they're making more and more progresses.
Excellent. All right, we'll have to leave it go at that, Chen. Thank you so much. Always a pleasure hearing from your story. You have some great stories, and we'll want to keep up with you in the future going forward.
Thank you, Jay.